Hello and welcome back. Hope you're good, doing well. So we are having some good news broke out over there for the risk on assets to go down, and the news specifically was related to the downgrade. All right. So the U.S. AAA rating has been downgraded to AA plus. All right. So there we can see that. So this news is just circling everywhere now. So Fitch downgrades US long-term credit rating from AAA to AA plus for the first time since 2011. All right, this is clearly telling us that everything is not right. All right, so after that news, we have seen significant movement into the market. Specifically, we have seen drop on the European equities. European equities went lower, and after that, the US equities also started to fall, and we can see that the VIX, which is the volatility index, just spiked up from 14 to 16. So yesterday we were expecting, as you know, that we have seen risk on wave on Australian dollar, US dollar, because Reserve Bank of Australia, they did not raise the interest rate, which caused the Australian dollar to drop, and that was a signal that the risk of wave is going to come. Yeah. So we are clearly having a risk of wave right now in the market. So some pairs, they are still lagging, all right, and specifically the dollar yen. This is basically the update on the dollar yen. So dollar yen is still hovering hover over at this top, so 142. So you still can chase it down. So the trade you are looking is simply very much similar like the move which we have just seen on Australian dollar, US dollar. So the Australian dollar, US dollar basically tells us about the risk. Okay, so what kind of risk we are having in the market. So risk on a move is just that was the risk risk on move. All right, so that risk on move fading. So we are having a risk off wave, which is just appearing over there. So Australian dollar is a risk on currency, while the Japanese yen is a safe haven. So investors running after the safe havens right now, selling the risk on currencies and selling the US equities. So what trade you are looking basically, so we were expecting a dollar yen to drop. So if I'm going to look at the Australian dollar and Japanese yen, so we clearly can see that the retracement in the previous Kiwi and yen chart I have just shown you. Yeah, so if you remember that we were expecting Kiwi yen to do the same like Aussie yen has done, right? So the retracement has gone below 50% of this bond buying. Okay, we have seen the bond buying from the Bank of Japan after the tweak was there, bond buying, and then what happened here? Reserve Bank of Australia, they did not raise the interest rate, and after that, downgrade. US credit rating has been downgraded, which is just causing that to continue to keep dragging lower. So Australian dollar to just keep pushing lower. All right, all the way up to this low. So is it possible for the Australian dollar to let me just look at this chart first. All right, so just give you an idea that why Australian dollar can continue to keep dragging lower. So similar scenario apply here. So news broke out, tweaked, Bank of Japan tweaked, then again a bond buying from Bank of Japan, then downgraded credit rating of the US. So Nikkei is about to remove these gains, all right? So Australian dollar hasn't removed yet. So we still may see more downside on the Aussie yen. So what is the trade which is still behind is the dollar yen simply. All right, let's get back. And the dollar yen is simply fall after, when the risk, because dollar is also a safe haven. So it takes time. So simply, the move you are looking right now is this, okay? So this to remove all its gains. So what we have seen here, all right? So tweak, from Bank of Japan, they tweaked, and then again bond buying, dollar gained. Okay, so credit rating downgraded, but we haven't seen the effect of that downgrading on dollar against the yen. But we have seen that effect of that downgrading on other risk on currencies. All right, so they're going down. So where you see the move still, their move needs to appear over there all the way back to that low. Yeah, at least. So in the previous video analysis, I have shown you the targets. All right, so targets are very much similar. So you're looking the dollar yen to fall up to, you know, this low first, and these are the target, and in longer term the target going to be much lower. So this is basically the update or setup. Yeah, so it's a setup, and the setup is clearly setting up over their price for the more downside. So what you are looking, you are just simply, you know, selling it every time, and you see that the pullbacks are coming. All right, if I'm gonna remove that and I'm gonna bring my color back, so there you see that the trend is simply appearing over there. Okay, both are safe haven currencies, so that's the reason. So right now yen is gaining, other risk on currency is falling. So dollar is not a risk on currency. All right, dollar is also a safe haven currency, so that's the reason it's falling, but after the other currency. So you are looking every time, and these 5-minute corrections appear over there, you're looking these corrections to just keep breaking down and keep following the other yen pairs. Okay, so all these corrections, in case if it tests that top, yeah, so still going to be a sell opportunity. This is not going to change the bigger picture which I have just shown you on the other charts. All right, like Nikkei or like Australian dollar and Japanese yen. All right, so you know, we as long as you see that the Australian dollar keeps falling, so your setup going to be valid. Or as long as Nikkei index keep falling, yeah, your setup is valid on the dollar yen. Or as long as other US or European indices are falling, yeah, so yen trade gonna be valid against the dollar, and that trade is not going to change. So we clearly can see that the European indices are in trouble right now. Okay, so the EU indices are you know, having problem right now. So the data is released, manufacturing data released in Switzerland, and that data, manufacturing data, has just, you know, gone down the March 2020 low. So that is also a driver right now. So there we can see that this manufacturing data, so this is telling us that the Swiss, you know, economy is slowing down significantly. All right, more than any other country at the moment. Yeah, there we can see that. So the manufacturing, the Swiss manufacturing broken below March 2020 lows. So the slowdown which we see there is far more bigger than the COVID-19 slowdown which we have seen in you know, Swiss manufacturing sector. So it's the slowdown is far more bigger than the COVID-19. Okay, we know that why that slowdown came. The Swiss National Bank, they raised the rates aggressively to kill the economy, and that's we see. Okay, we see effect of that is appearing over there on European equities. Yes, downgrade and you know, other indices are not doing well as well. So there we see that the European stock is Euro stocks 50 is also falling. Yeah, as long as you see they are going down, the trade which I'm showing on the dollar yen going to be valid. Hope that makes sense, guys. All right, so thank you.